Okay, we'll have to shift focus then, and volatility in global iron ore prices. That's something that we'd like to discuss. And who better than NMDC, India's largest iron ore miner, to talk about the same. We have with us Mr. T.R.K. Rao, the director at the iron ore major NMDC. Mr. Rao, thanks so much for joining in on ET Now. And you know, my very first question is going to be on the way iron ore prices have moved. You know, we've seen iron ore come off from $80 and $82 per ton all the way now to sub the $70 per ton. We're hovering at about $62, $63. What would you attribute this to? Is it on account of the fall in steel prices, or is it the demand supply fundamentals which are again triggered by all the trade war fears at play?
Yeah, good morning, and thanks for this opportunity. In fact, as you see, the global iron ore industry is completely, the prices are set, or rather dominated by the developments in the Chinese steel industry. In the winter, there has been a contraction in demand, especially this happens quite seasonal issue in China. As a result of decline in demand for steel products in China, plus a lot of winter production cuts, there has been a loose supply-demand rebalance in China, as a result of which the price of the steel products have come down, and as a result, the iron ore prices globally also have come down. And even the premiums, which used to be very high for pellets, because of the very good steel margins which they had enjoyed prior to October, all of them have come down because of the slackening of demand in China, and also lack of any economic stimuli in the last 2-3 months.
Got it. You know, you as well, I mean, NMDC has as well taken a price cut in the month of December for the first time in many months. I think, in fact, it was July, since July, that you have been on this rising trajectory for prices. So is it this drop in global prices that has prompted you as well to do so?
No, there has been a lot of imports. If you see the domestic and the international steel trade, there have been a lot of imports coming in, whereas exports of steel out of India have been declining compared to the previous months. This has resulted in excess steel supply. I mean, I think it's only for a shorter period in the domestic market, because of which there has been a slackening of demand, especially in the month of November. Till October, the price of steel products were rising very high, as you mentioned. And in November, there has been some sort of an excess supply in the market. Combined with that, there has been a sharp reduction in prices by our competitors, especially in Orissa. The Orissa miners have cut their prices from 8 to 20%. So as a result of which, NMDC though has been increasing the prices month on month till October, had to correct the prices in the month of November. And even now the market doesn't seem to be doing very well. This is December also, there has been a slight drop in the prices of steel products like the sponge iron, the pellet, and the HR coil and the TNT.
So Mr. Rao, you're saying that steel imports have increased, and that's the reason why demand for domestic iron ore is falling. Is that right?
No, what I'm saying is that there is a capacity imbalance, in the sense that there is more steel now in the market. This, combined with lack of demand, has led to the drop in steel prices. And normally the iron ore prices tend to follow the steel prices. So there has been correction in the iron ore prices.
Got it. Okay. Mr. Rao, you know, we also understand that steel companies, I know, like you said, you know, production perhaps may be slackening on account of the glut in steel, but whichever steel companies are manufacturing, they are tending to resort to importing iron ore. And from what we understand from reports, it's led to a pile-up of iron ore in Karnataka. What is the reason for companies resorting to importing iron ore? Is it because of some grade difference? And is this as well a reason you've taken a price cut? I know you mentioned Odisha has cut prices, but are they also cutting prices on account of this glut in iron ore?
Yeah, basically because the glut in iron ore, there has been a structural shift in the demand of iron ore in terms of the grade. Earlier, all the West Coast based players, basically the imports take place on the West Coast side, like the Jindals were on the West Coast and some plants on the East Coast and then Gujarat. It becomes more in terms of the landed cost, they do import. But of late, because of the premiums for the low grade fines compared to the high grade fines falling, the low-grade fines are selling at a quite a cheaper rate. I mean, they are getting on a, they are importing huge low-grade fines from countries like Australia, especially the JSW. So, as a result of which the imports have surged. And in terms of landed cost, so the domestic miners, high-grade ore is still competitive, but they are importing the low-grade ore from Australia. That resulted in sharp surges in the imports.
Based on what you're saying, Mr. Rao, is it safe to assume that perhaps come the next month or over the next few weeks, there is a possibility NMDC will have to take one more price cut?
No, actually, we normally go with the market dynamics. If the market doesn't improve, we tend to do this kind of corrections. But it looks for the next couple of months, the market is may not respond the way it had responded till October. Or the prices have reached the peak of in the year 2018 in the month of October. So slight corrections could be possible.
I just want to,
and they will be range bound. And I am saying that they will be range bound. It will not be any, because India, the growth story of steel is very good. The steel consumption is, is going at 8+. And so the steel consumption is definitely will continue to rise in our country. And we are likely to replace US as the second largest consumer in the next year. So there will be a buoyancy in steel prices. It's only short-term corrections which has set in because of the factors I mentioned.
That undoubtedly, I mean, we are one of the fastest growing steel consumers across the world. I want to also talk about the Doni Malai mine. I know the Karnataka state government is asking for 80% revenue for that mine. You're, of course, contesting that the same is not tenable under the new Mining Act. So what are the relevant provisions that you're putting forward while contesting this? And in case if NMDC is forced to accept the 80% premium, how would it hurt your EBITDA per ton, your margins?
Clearly explains the state government, saying that if the 80% premium is put, the total outgo to the state government would be 104%. That means in excess of 100%. So with that kind of a payments to the state government, the mine would not be viable. And in fact, the legal position also is very clear. As per the Section 3, all mines which are allocated to government companies prior to 2015, this premium, that too based on sale price, is not leviable. We have taken the opinion of the highest legal luminaries of the country. And then we have made a request to the state government that they are also taking their own legal opinion. And we are trying to discuss with them.
Is there any timeline?
Sorry?
So is there any timeline for the renewal? I mean, there must be a hard stop date, right, by which the state government will pronounce whether or not they will be renewing your lease. I mean, by when can we expect some sort of an announcement?
We are in a dialogue with them. We are making regular requests, and we are also holding meetings. We'll let you know once that happens.
Okay. Okay, great, Mr. Rao. We would have loved to chat more, but we are a little short in time. But thank you so much for joining in. It provided a lot of clarity on how iron ore prices are moving in India. NMDC, of course, has taken its cut, and they do believe that prices had peaked in October. So there could be some more cuts on the anvil. But yeah, not to mention steel production in India, steel consumption rather in India is one of the best across the world. So let's see how this is essentially going to shape up for NMDC.